The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, FinTech, and the future. The future of banking is here.
Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Nigel Walsh, aka Mr. Insurtech. Nigel is a partner in Deloitte's financial services technology practice, where he focuses on Insurtech. With a background in end-to-end technology transformation, he works with insurers on the journey to becoming truly digital. Prior to joining Deloitte, Nigel led the UK insurance business for Capgemini, where he advised UK and European insurance companies on major systems replacements and technology transformation projects aimed at improving the customer and broker experience. Nigel hosts a podcast called Insurance Insider, where he goes deep on Insurtech topics on a regular basis. If you find today's episode interesting, check it out. Thank you very much for joining us today. Please welcome Nigel Walsh. Nigel, welcome to Rebank.
Thank you very much.
You're kind of the guy when it comes to Insurtech, the area I'd like to focus on today. Do you want to set the stage for us in terms of what's been going on in Insurtech over the past few years, just to bring everyone up to speed?
Sure, and thanks. Very, very, very flattering of you to say so. It's something I'm actually quite passionate about, and the insurance industry right now is going through some tremendous change, which I think is really exciting. And I think all the insurance companies agree as well. This whole evolution or birth of Insurtech right now has come on the back of all the banks, of course, with what's happened with FinTech, working out ways to get things done quicker and more efficiently than they've ever done in the past. So the Insurtech guys came about by saying, it can't take this long to do things in traditional technologies. Look what our peers are doing in the finance industry or in banking and retail banking. What is it we do here? And as you'd expect, they picked up on things like distribution or front end or access for the customers to engage in a different way. As we all know, driven by the likes of the way we buy our groceries online, the way we use apps today and all that sort of good stuff. So Insurtech has come about because customers are used to different experiences. And dare I say, go back 5 years, our insurance companies hadn't really got up to the mark properly and said, actually, we can do that too and allow you to engage with an insurance company in the right way.
Yeah. Well, I think it'll be a fascinating chat today. I think we'll get into a lot of these topics as we go, but that parallel between kind of FinTech and Insurtech, and I suppose others can debate whether Insurtech is a subset of FinTech, but who cares?
Exactly right. Exactly right.
From FinTech kind of came from a place of either access to finance or how can banking be provide a better customer experience, and I guess that kind of intuitively makes sense because you maybe interact with your bank or your money on a daily basis.
Transactional, right?
Whereas insurance traditionally is kind of like set it and forget it. So there is kind of an interesting difference between FinTech and Insurtech, and optimizing around the customer experience is great, but it's maybe once a year. Of course, we're seeing different models, which we'll talk about, which kind of push you toward daily or weekly take out of micro policies. But maybe before we even get into all of that, just to ensure that everyone listening is starting from the same point of understanding, the traditional model in insurance, these massive insurance companies that create products and carry risk. You have brokers that handle the distribution. And then you have reinsurers sitting behind all that who are basically providing insurance to the insurers. What are the points of friction in that model?
So I'm not sure how long this podcast is, but there are a ton of points of friction or inconvenience, I could say as well, that happen at every single point within that journey. So you could argue the quote and buy piece has loads of friction points. You go back 10 years, maybe 20 years, we'd all sit there with the yellow pages and call each one of the numbers in the yellow pages for the car insurance quote. That got overtaken quite quickly by the price comparison websites that made it more convenient for you to do stuff. The price comparison websites, for example, nowadays are saying, well, why do I need to give you 50 or 100 pieces of data and take 5 minutes to answer a questionnaire that you then go and surf through 130 different quotes in 60 seconds? I want to give you one piece of information. Here's my postcode, or here's my registration number, or here's my ID details that you've got that you can take and make easier. So evolution generally for me is all about making these things frictionless or more easy and more convenient to do things to acquire that product. You're absolutely right about the transactional nature of a bank account. Things are going in and out versus actually I want to buy my insurance policy and never really want to use it, because as soon as you call them, something's in a bad state. You've had an accident, something's broken, there's a leak at home, you're there to recover a loss. But equally, and we'll come on to it as we go through this later on, I think the business models are absolutely changing. I talk a lot about a concept of frictionless insurance in a land of utility. So how do I take out all those pain points at every single stage of that journey, whether it's at buy, whether it's at claim, and then in the land of utility, which says, actually, I only want it when I want it. I don't want it all the time. And there's people like Cover with Freddie McNamara and team that will buy or let you buy car insurance for a car that you're borrowing from a friend by the hour. Other people out there will have apps and capability where you can literally turn the insurance on and off as you see fit, as you need to do it, whether you're going on holiday. Revolut, for example, got into insurance just recently and said location-based insurance. You land in a different country and it offers you insurance for some of the products that you might be carrying with you. So all these things for me are interventions to make the use of insurance much more friendly and engaging with the consumer.
It's interesting, and I suppose looping back to that FinTech parallel, there's one school of thought in FinTech that a lot of what's possible now with technology, with automation, with effectively intelligence, is that the banking interactions or the financial transactions kind of move to the background. And it's not so much a question of customer experience, i.e., how do I open a new account? How do I make a payment? It just all happens for you. Could you see insurance moving that direction?
Yeah, and actually, there's a school of thought, and I'm a firm believer in it, which is why I think this race to get engaged with the Insurtech community or improve insurance as it stands today, there's this school of thought, again, I'm subscribed to it, that says actually we could become invisible or embedded in the future, which means your only opportunity as a traditional carrier with lots of assets and legacy people, products, capability, buildings, is to be the most efficient manufacturer. And you then compare the world of Insurtech with none of this sort of stuff that's got the ability to go to a WeWork and set up with 3 guys, an idea, go and get support from a reinsurer for capital and for regulatory access, and launch into the market quite quickly. All those barriers are dropping. So if your race is only to become the most efficient manufacturer and have your product consumed by a third party, whether it's a retailer, whether you buy a TV and it comes embedded into that, or you can flick a switch or whatever else, that's a really interesting space right now. In the same way that PSD2, I think, is going to affect banking, the world of APIs and whatever else, I think, will have the same impact on insurance that allows us to consume those things in different ways. There's some great examples in the market already. Lemonade opened up their API recently for you to consume and have that capability to link to other things. Quava in Belgium did the same thing recently. Just this week in the UK, one of the price comparison websites did the same thing. Slice have launched their insurance as a platform. There's a consistent theme here of people making it easier to get to market quickly, which I think is the key thing here.
Yeah. How much of this is about cutting out unnecessary intermediaries? We talked about that almost kind of 3-tiered model, if you will, the reinsurers at the back end, the insurers, and then the distribution layer. You mentioned there reinsurers basically supporting kind of direct distribution plays. Is that an effort to cut out insurers? Is there a sense that one of those 3 layers captures a disproportionate amount of the value?
I think it's a hedge on where the future might be. So as a reinsurer or as an Insurtech, what things do you need? You need access to capital and you need the regulatory controls. If you can get that from a reinsurer without having to go through a primary carrier, then you've got access quite quickly. And plenty of folks are doing that right now, whether it's XL or it's Munich or whoever else. There's loads of people in that space that are creating capability and capacity for the startups to get to market. Their next challenge is things like distribution. How do I get to market with something that's relevant and acquire customers? No different to the fintech world, right? Because you look at a great new capability that's built on features and functions that's really, really cool to solve a specific thing. The next challenge is then customer acquisition and the cost of customer acquisition. So there's lots of challenges in this space. To your point on broker versus intermediated or whatever else, I believe we have an opportunity to enhance the broker experience or allow you and I to have the flexibility to choose what we want when we want it and flip it up and down accordingly depending on what I'm buying. If I'm buying a simple motor policy or whatever else, I know where I'm going to go direct to whatever else. If I'm buying a reasonably complicated cyber policy or very complicated marine policy, the likelihood is I'm going to go to get some advice from someone I trust and engage on that can write something specific for me. And I firmly believe that the technology will enable brokers to engage better and do their jobs in a more efficient way, as opposed to eliminate them entirely. So it's the bionic underwriter, it's the bionic broker, it's the enabled as opposed to replacing those individuals.
We had Rob Moffat of Balderton on the show a while back, who talked about the potential for technology to create solutions for the long tail of insurance needs, i.e. the huge number of non-standard or rarely insured items. He talked about pet insurance specifically and other one-off policies for unique assets. Like the rest of FinTech, basically it seems like there are two main opportunities. One is improving the existing model using technology, i.e. making it more efficient and kind of improving the customer experience. And the other is creating entirely new products that weren't possible before without this kind of cheap, efficient technology. What are the most interesting opportunities in Insurtech, in your view?
So I think I classify this as incremental, which is basically improve what we've got and continuously getting better and better at it, versus exponential. And I would argue 95% of the Insurtech startups or people playing around in this space right now are focused on the incremental. How do we get things better than they've always been by eliminating stuff, making it more efficient, making it more lean, etc. And that's great because they've not been touched for a long time. There are very few right now on the exponential side. There are very few full stack insurers being reborn from scratch because of the requirements around capital and everything else. There's a good number that happen in Europe. There's one or two in the States. Very few in the UK. In fact, none, as far as I'm aware, in the GI side. There's one in the life side. But there's very few exponential things that are changing inside the insurance industry in that way. That doesn't mean to say we can't apply the technology to doing new things in a different and more efficient way. One of my favorites, and again, I've been engaged with these guys for a while, is Laka. And Laka, formerly Insurer Thing, have a very interesting way of allowing you to become part of a pool that will cap the cost of your claim at any single point, but is a totally different model to you going, I'm subscribing, here's my policy cost, and here's my excess, and here's my claim. They really are starting to fundamentally change the way we think about insurance, which leads to a different issue around education. So everyone knows what a bank account is and how you transact on a current transactional things go in and things go out, the same for credit cards, the same for payments. I would argue, in some of the research that we've seen, the education and level of understanding for individuals around insurance, both what they've bought and importantly what they need, isn't necessarily there. Yeah. So as soon as you go from personal lines, I need motor cover, which we all kind of get because we're told this is the standard policy, into SME or mid-market or into enterprise, that's when the role of the broker gets better, or the role of technology to help people understand what they should have. So if I said, hey, Will, you're moving into this industry, people like you or companies like you need these things. These are mandatory covers, followed by, and people like you in this area might have these this level of risk appetite. They're the sort of things we need to get to people to help them understand and tell them why they need them. And I think the opportunity for technology is to both get there more efficiently and educate them along the way.
Mm-hmm. And I guess trust must be a huge component of this, especially for new entrants, because if you're talking about something like, I don't know, life insurance, for instance. Okay, how can I be sure that when I'm gone, the underwriter of this policy is going to pay out? Or if it's a new model, how can I be sure that when push comes to shove and unfortunately I actually need to claim on this policy, it pays out?
Yeah, it's interesting. I've been talking about trust for quite a while in terms of maybe it's a generational thing. So you'd go onto a price comparison website, you do your search, you look at and they're ordered by default by price. So I have an issue with this at the moment in that it's a race to zero on price as opposed to value and outcome or service or whatever else. And we're getting better at that these days. We've got the Trustpilot ratings, all the other things that go with that. But we go through this process and we go, actually, I don't recognize that brand as a certain generation, but I do recognize those guys. I'm confident they will pay out as an organization because I recognize them, they're big enough. I'm actually starting to think that's going away to some extent because all these new startups have different names, funky names. They're backed by people in many other cases that you'd recognize. So I think the trust is often trumped by convenience when it comes to things like policies around things that are less important. But when you get to life insurance, I'm with you. But then again, look at the generational or the age of people that are buying life insurance. You're not going to come out of university and buy life insurance straight away because you've got an affordability question. You've got the whole other things that go with it. But by the time you get to that point where you've got a family and kids and everyone else to look after, you want to ensure you've got that level of comfort, whatever else. So I think trust is important. I would relate it back to generation, product type, and I guess your risk appetite.
Yeah. I mean, from a purely personal standpoint, as a consumer of consumer-focused insurance products, trust is perhaps the biggest issue. But it's not trust that the insurer is going to have the funds to pay out, if and when needed. That's not really the concern. The concern is, am I actually getting what I think I'm getting? Because if the policy documentation is dozens, if not hundreds of pages about what all the exclusions are, which they kind of send you after you've already made the payment, and it's then the burden's on you to dig through this, to challenge, to I suppose use whatever the 14-day free cancellation if you want, but who's going to do that? It's like the idea of giving someone 100 free nights with their mattress, because who returns a mattress after 100 free nights? Like that's the tough part, right? And presumably some of the innovation in Insurtech, the newer providers, has to be around, it's a 2-page policy document because there are no exclusions.
And we're getting better at it. So first and foremost, I have returned a mattress. I have returned a mattress because we were given the option to do so after 100 days. And you get there, you go, you know what? We didn't find it comfortable. We got rid of it. So we got rid of it, right? On the insurance side, have you ever read your policy document?
I have. But
what?
Having read it, firstly, I don't think I fully understood it.
Okay.
Secondly, you kind of read it and you think, damn, they got me. Or hadn't thought about that. Don't feel like there's much I can do to push back against that. Okay, I guess that's how the insurance world works, sort of thing.
So again, as a consumer or as an individual, unless you're going to the high net worth or very bespoke space, you're given a policy and you're not able to negotiate the wording. This isn't a contract. This is something that you're buying. There's the terms and conditions. And dare I say, it feels like a like it and lump it type conversation. If you wanted something more bespoke, then we go back to our world of brokers and we can write you a policy that's relevant to you as an individual, with the broker wording that's augmented against the underlying paper that allows you to get something that's very bespoke. And that, of course, comes with a cost. But for me, that's the value and benefit of having a broker. So if you are a professional sports player, you want to insure your legs, for example, or you're a musician and you want to insure whatever, you go to someone and say, these are the things that are important. We tailor that policy for the risks that we see accordingly. That's the beauty of the insurance industry in my mind. We're able to go bespoke almost anything that you want to write that risk accordingly. The complexity or the issue I have for the general population or audience in general, I guess, is we don't know what we're buying, and the 50 questions we put into our price comparison website are the ones that are broad enough to write things and get us to that 17-page or 20-page document. We are getting better as an industry at plain English. So can this be understood by someone with just simple English skills? We've got the things like the key facts documents that come out and highlight the things that are there around duration and premium. And I think the regulator's done a really good job in driving some of these things to make it better for the consumer. But they're still lumbered with the 17 or 20 A4 sides of complicated gobbledygook that mean a lot. And ultimately, back to your point on trust, you want to be able to pick up the phone and go, I never read it. I was never really going to read it. I have a leak. Is it covered? Or I've crashed my car. Is it covered? And I feel if you look at some of the funny complaints or claims that have gone through over the years and the news that you see, you know what? They're reasonably good at upholding these things. There was a recent case, as an example in the news, that was discussed online around your level of intoxication. And it was quite an interesting debate online about if you're really, really drunk after far too many drinks on a holiday out, is your travel insurance valid or not? you fall over and slip and you've hurt your head or you've done some damage, then should they pay out or not?
First world problems. So we talked before about how there are a lot of reinsurers involved, and I guess, again, just to make sure there's a broad knowledge base when it comes to insurance, reinsurers are some of the biggest companies around, aren't they? I mean they're basically standing behind insurers who each of which have billions, if not more, of exposure. So the big reinsurers are really massive companies. It feels like maybe unlike FinTech, that Insurtech from a relatively early point had buy-in from incumbents in the insurance industry. Do you want to, talk about that at all? I mean, what are the likes of either the large insurers that people might be familiar with, or indeed the reinsurers doing? How are they contributing?
So I think the buy-in here is different to FinTech, and I've often discussed it simply because I think you can unbundle financial services. And if I stick to banking just for a second, I can unbundle banking, and on my phone I've got apps for transferring money, for making direct payments, for everything that my bank should do, but I've done outside my bank. And I can do it in a really easy to do fashion. In the world of insurance though, because of the capital requirements, because of the regulation that we need, we're not really seeing that level of unbundling. We're seeing more partnering. So whilst I could technically live without a bank account and use lots of unbundled capability, there's a famous piece of work that was done and used at almost every conference by, I think, CB Insights, that shows a big four bank and all the things that the logos of the startups that then take it away bit by bit, or that do the services that they offer. You don't really see that for insurance. You see them partnering to make the actual overall experience better, and I actually quite like that. So for me, I think that relationship and the need to have those things linked together and need to be able to go, I don't want to do just a claim on my own or quote and buy on my own. I want the end-to-end journey to be better. If I'm doing a payment, it's just a payment. It's a transaction. If I'm insurance, I need to be able to back it up end-to-end. I need the purchase piece. I need the servicing piece. I need the midterm adjustment. And then I actually need the claim capability at the end. So you don't often unbundle that in the same way that you do with banks. Separately, I think there's actually a phase now where over the last 5 years or so, we've seen this unbundling. I actually starting to see rebundling of these things from a convenience perspective. And I think from a product point of view, you and I as individuals will probably have motor, home, health, pet, life, yada, yada. There's a long list of things that we have. We're now getting to the stage where we go, actually, can I make your life easier, Will, and give you time back in your diary to do things that are, I would say more important, but more valuable to you right now than worrying about 17 different policy types. Actually, we're going to orchestrate all those things for you and be either an all risks or a wallet type capability with the likes of Pouch or Brawley and those things that are out there today that make it more convenient for you to engage in the insurers.
So for fun, maybe you can mention some of the most interesting Insurtech business ideas that you've seen, whether or not you expect them to work.
Oh, wow. I mean, so there's like 3,000. There are so many Insurtechs out there right now. I'm a genuine believer in start with why. And what are we trying to solve? Are we trying to solve a growth issue? Are we trying to solve an engagement issue? Are we trying to solve a compliance issue or not? And there's loads of companies that will fall into each of those categories. We've broken it down into the value chain for insurers. There's loads of ways to slice it. The ones that are fun for me, I've mentioned Lacquer, and they've started with cycle insurance. Again, I like what they're doing because it's a model change. It's a fundamental model change. The challenge we're going to have collectively is making people comfortable with that new model. Back to education. I like in Standard, I've worked with these guys quite a bit. There's about 200 different platforms out there that allow you to get product speed to market quickly. I don't want to take 12 months, 18 months, 3 years to do a big policy transformation anymore. I want to get a product in the market, test it and see if it works. And if I can do that in 6 weeks or 9 weeks or whatever else, that for me is a benefit. It's a transformational benefit to the insurance organizations, the MGAs and the brokers that are out there to go and test something and go, you know what, that didn't work, let's shut it down. Let's try something different and keep tweaking and tuning it. So we're becoming more fleet of foot and agile. There was one the other day that talked about insuring your pizza. I mean, it's when I say fun, I mean that's borderline ridiculous for me. And generally, there's just loads out there that will break down to each and every single one of the areas. So we could go through every piece from claims and the folks like Ride and Dem and what they're up to in that space. the data guys out there, because of course as an insurance industry we thrive on data and need to get really, really good at that. So we've seen people like Cytora do some really cool things in this space where we're consuming data and doing stuff. Not necessarily in insurtech, but playing in the insurance field and making life easier. There's the guys like Data Robot that are aggregating data in a much more fast and really interesting way to give you better claims and fraud access that you would ever have before. So all these things get back into your first category of actually how do we make the current experience way, way better? And then of course, we can't finish without talking about APIs or AI, which I think are some of the two or three big themes that are out there right now. And I mentioned earlier, the API guys are really going out there in the same way that you have like marketplace banking from the Starlings of the world. Well, we've got Lemonade, we've got the Slices of the world, the Go Compares, all these folks that are then saying, consume us in a different way that you've never consumed us before. Let us be part of that ecosystem to do something that's really interesting. And then AI. I mean, AI can attack every single facet of the insurance industry, either inside or out. And again, one of my favorites in this space is the work that Risk Genius are doing, and Chris Cheatham and the team, and Jeremy Smith in Kansas. And I just love it because it's such a beautiful use case for a problem that exists and is laborsome, tiring, inefficient, traditional, all the things you associate with insurance, for scanning policy documents, understanding the context, looking at the wording, comparing it to your own or your competitors, and bringing out what the risks and issues might be. But in essence, it's like a Google for your policy wording. To your point, you're probably the first, maybe the second person I've met that's actually read their policy wording. You ask that question in a conference usually, and it's a like tumbleweed. No one puts their hands on. These are insurance professionals. So you're amongst a very fine small group.
Well, you're the only person I met that's returned a mattress after 100 days.
Touche. I'm sure there's more. There's got to be more of us. But the AI stuff, I think it's great, right? And again, as I said, there's companies jumping up every single day in the insurtech space. Above and beyond that, the adjacent parts of this are interesting as well. We talk about self-driving cars. Where does the role of insurance sit? Is it for me as an afterthought to the vehicle, or does it get bundled with the vehicle when you buy it from the manufacturer? You look at what people are doing with the Driven experience in the UK consortium, which is people like Excel, Catlin, Oxbotica, the UK government, and a whole host of others. Again, you've got a reinsurer in that game, which is working with the manufacturers to work out what it's going to be going forward. Equally, you've got the likes of RSA or AXA also doing some cool things in this space as well. So it's a fascinating space, both full of insurtechs having some fun, but also the incumbents.
Yeah. Well, I love that point around whether an insurance policy ends up getting bundled within the purchase or the use of a self-driving car in the future. And one of the things, I guess, that, and this is again, pure kind of consumer psychology, but going online to buy an insurance policy is cumbersome. It's something you kind of put off doing because, like, I would prefer not to spend the money. Two, I prefer not to think about why I need an insurance policy, i.e., all the bad things that could potentially happen. And then on the other hand, there are some really cool, effectively policies that are incorporated into other things I buy. So my credit card covers the driver's insurance if I rent a car, or an extended warranty, or travel insurance covered by Amex, whatever it is. If I rent a Zip car, it has not only the fuel but also the insurance incorporated into it, and somehow that feels like you're getting something extra, and that's a good feeling, as opposed to that almost bad feeling of having to go online and seek out this insurance policy and buy it. I wonder if going forward, people start to play around a bit more with incorporating insurance into goods as they're purchased, into experiences as they're had.
I truly believe this is the way we'll start to see things. I mentioned a minute ago around being embedded or invisible. Insurance in those instances to you is invisible. You jump on a train in the morning to work, or a tube, or whatever else. Whilst you don't have direct insurance, that whole thing is covered by someone at some point for the public liability, whatever else happens in that place. In the same place, you go to a workplace, we have all of our covers in place to make sure that we can operate efficiently. You walk into most corporate receptions and you see the insurance certificate on the wall as you walk in. It's a typical requirement. the bundling of pieces together to make your life more convenient and spend time on the things that you enjoy doing, I think is fascinating. We've got to be careful in the same way that the regulators looked at bundled bank accounts to make sure you know what you're buying. We're actually clear what you have here. Your example of Zipcar or elsewhere, I think is really, really interesting. The same is true for things like the sharing economy or the gig economy. You can go in there and go, as a gig worker or an individual, what covers do I need to engage with company X or Y? So I think how we evolve our products to meet the changing business models that are out there and how we work and play and whatever else that we do are actually really interesting, which goes back to why the insurtechs, I think, are winning, because they can be more agile about bringing product to market that's relevant for the niche that we have today. Example, cyber insurance. Go back 5 or 10 years ago, cyber insurance was probably not mentioned that much. You'd have called it business interruption or whatever else. Today, it's a very, very almost a required thing for an organization to have cyber cover for an event, should an event take place or when an event takes place. We haven't yet seen the rise broadly of personal cyber cover, but if we don't own any assets going forward and we rent our car and rent our house, our only thing that we own is probably our identity online and the assets that comes with, we're likely to see, and give it this year, a number of providers launching a personal cyber product.
Interesting. Much like peer-to-peer lending was to FinTech, maybe, there are some insurtech models around unintermediated risk pooling within communities. Maybe the bicycle cover that you mentioned before was an example of that. What's your view on that model? Is that viable?
It's an interesting one, and I'm not convinced. LACA aside, because LACA is about claims pooling in a different way. In my mind, it's a business model change. Broadly, though, the peer-to-peer carriers, I think, haven't managed to capture the imagination or the ambition and understanding of the clients just yet. So maybe it's back to education. You go back to insurance hundreds of years ago, this is in essence what it is. It hasn't really changed. It's got a different distribution model, different digital capability on top. But there's plenty of peer-to-peer insurers out there in the same way that there's peer-to-peer lenders. I don't think they've got the scale or reach into the market that they thought they would get. It's an interesting model. I don't think it's taken off just yet. Doesn't mean to say it won't work. Is it back to education? Is it back to understanding? Is it back to comfort with the risk or trust? I don't know. But it's an interesting one to watch as we see things go forward. It's definitely worked in lending in my mind. I've played about with some of the players that are out there right now where you can put money into a pool and it gets lent out accordingly. That for me seems to work quite well because they're beating the traditional products that you've got out there. Whereas the insurance side, I've just not seen it.
Yeah, that is some of the best diplomatic wording I've ever. They haven't yet captured the imagination of customers, i.e., no one's buying it.
No,
beautiful.
How's that? Nice and simple.
It's kind of interesting. The timing of this conversation, our conversation. I think it was just this week. GE announced a $6.3 billion loss and the need to allocate an additional $15 billion of cash capital to support its insurance business, and that was largely due to losses in the long-term care piece. I.e., policy specific to long-term care for individuals. For a while, it had kind of seemed like the idea of using new big data techniques to either improve credit decisioning or to, in this instance, improve risk underwriting wasn't going to be a thing because based on experience, based on actuarial models in the insurance industry, that just wasn't the big problem. But this GE announcement would suggest that there actually is still a significant challenge there.
I mean, I can't comment on the specific case. However, I think this is where insurtechs and new technology in general have a good opportunity to help understand what risks we're actually carrying in the first instance. You go to many organizations and say, okay, what have we got? What do we need to do to provide reserving for, et cetera, et cetera. And the reality is we don't know. Often we don't know what we've actually written in the first place. That may be decades and decades old. enter stage left, risk genius, different technologies in that sort of space. They can understand those policies in real time and bring out the details for you to say, actually, here's what we've got based on the documentation that you've now given us. I think there's an opportunity, even if you look at the reserving actuaries that are out there, what does the exponential actuary of the future look like? How do I leverage data that's not 6 months old or 12 months old, but actually it's near real time, it's a month or it's a day or a week to help me make better and more dynamic decisions going forward? So as an industry that manufactures nothing but data, we've been traditionally very, very poor at it. I think going forward, we're going to get better and better. And the key thing here is about how we adopt and implement to leverage those things going forward. So whilst not commenting on the GE case, I think there's a level of technology that can be applied here, whether it's Insurtech or general tech around machine learning and AI, that can help us understand those things in a much better way going forward.
Taking a step back and looking at the Insurtech industry more broadly, kind of where we're likely to go from here. If you were an Insurtech startup right now, where would you be looking?
So for me, and my continuous advice to the folks that are brave enough, I genuinely mean this, I hats off to the guys that are giving up, stepping out of their current careers and doing something new and exciting to disrupt the industry. My advice is focus on the partners that can help you get there fastest. Don't focus on volume, i.e. let's not have 35 pilots. Because of the hype in both FinTech and Insurtech, we've seen people playing around with lots of Insurtechs and having the conversation so they can engage and understand and learn, which is fine, right? We understand it's a two-horse race here and we've almost got to play fairly in this space, but work with a few partners so they can get you there fastest, as opposed to lots of partners that will just have the conversation. Yeah. It's a really tough challenge right now.
On that point, or related point, I guess, how easy or difficult is it for large insurers to replicate some of these newer ideas?
It's funny, the debate was had a few weeks back about large banks able to replicate or copy an app that an Insurtech or FinTech may have created. And I think actually in many of these cases, it's quite easy for them to do it. And their ability, their speed, their scale, their capability means they could do it if they wanted to. But often they don't have the capability, the capacity or other things to get them there faster, which is why I believe, to our earlier point, the partner model works really well for them. So they can do it as an adjacent piece or as an aside, prove it works, and then bring it back into the mothership to go, this is how we want to roll it out going forward. So there's back to, look, we're in the business of risk. So if we're going to shift our business entirely that way, or we're going to play with it on the edge to do something differently, I think generally some of them could replicate it. There are definitely some that cannot replicate it. The benefit of a startup, whether you're FinTech or Insurtech, for me is you are unburdened by legacy. So you haven't got decades of legacy applications, systems, thinking, all the other things that go with it. So you're free to move quickly. And often that external intervention works really well to, poke the bear and make it move faster or do things that are different.
Flipping that earlier question around, if you were an incumbent insurer, what would you be doing right now?
So I think here it's the same advice in reverse. Pick the ones that make a difference. Back to my start with why. And when I say start with why, if you're an insurance organization and your focus is growth, then work out which of those insurtechs can help you align to that objective. If yours is cost takeout, then focus on the ones that will help you optimize a process, make things quicker. It might be culture related. So it doesn't have to be any individual one specifically, but you have to have a plan that says these are our three core objectives that align to our business strategy, and these startups here may help us get us to that point.
Yeah, but it sounds like some of the larger organizations have basically taken on some learnings from Insurtech. You talked about policy wording, simplification. It feels like there's been a bit more kind of streamlining of policies, and also in terms of the onboarding, the customer taking out the policy to begin with. There were a few insurers that have announced very quick, 3-4 minute application processes.
Yeah, I mean, and they're all doing it. I mean, if it's whenever I see these, and don't get me wrong, they're all in the good way to do things. I think Aviva announced they're going to do it in 3 minutes. Home Life announced they're going to do it in 4 minutes today. It feels like that advert. You remember the 7-minute workout that then became the 6-minute workout? I'm waiting for the 5-minute workout to the actually don't work out at all. Yeah. You've got other companies, and again, people like Neos on the insurance side, again, leveraging IoT technology, that they only need your postcode, and they can take your postcode, they can take a gazoodle amount of external data, I think 251 items, and give you a quote instantly. What we have to be careful of on this thing is the psychological impact back to the customer. And I use my mum as an example quite a lot. So would my mum be comfortable with here's just my postcode and there's your quote? I think the first reaction would be, oh, that's really good and that's really fast. The second reaction is, oh, but do I need to tell them all this sort of stuff? And
how do I know I'm covered, sort of thing? Yeah.
Exactly. So that's not necessarily my mum or anything else. I think that's a level of education for the consumer to get comfortable with these things going forward.
Well, because you brought up that example, I feel like I have to ask this question, which is around potential risks. So as we get smarter, better at underwriting, more access to data, are you concerned about exclusion of individuals? Either, smarter pricing, personalized pricing means some people can't afford insurance or aren't offered insurance at all.
Without a shadow of a doubt. And I believe the regulator did a report a while back about creating the uninsurable class or creating the uninsurable area. In the same way that we've got pool re for floods, right? Insurance needs insurance pools for it to work accordingly. And if we then get to this mass personalization for a segment of one, and we know exactly where you are and exactly where I am, we are by default creating people that will either be able to unafford insurance or not get access to it in the right way. Therefore, it moves away from an industry issue to a governmental issue. Yeah. So I think there's definitely, with the leverage of the use of big data and all this insight that we've got, we are creating a different issue going forward.
Well, that's an interesting one, the one around diversification and how diversification works. And it's effectively different exposures with different risks associated with them. And if you're cutting out a significant portion of potential applicants, then there are some interesting kind of secondary and tertiary effects on diversification risk management.
Unintended consequences are happening all over the place with this, and I keep hearing them. And not to be morbid about it, I heard an unintended consequence of self-driving vehicles, which is if all these vehicles are having less and less accidents, which we know is now taking place already, that means there's less fatal accidents, which means there's less organs for people to use for organ transplants. So these are unintended consequences of making our roads safer and other things like that. We just have to work out how we deal with those going forward.
All right, so to wrap up, a blue sky question for you. What, in your view, in your wildest imagination, could the insurance industry look like 20 years from now?
Oh, wow. I think, and 20 years is so far out. Wow. For me, so we will still be here without a shadow of a doubt. Insurance has been at the pillar of society since Lloyd's coffee shop all those years ago. We will still fundamentally be here doing things in fundamentally similar ways by basically taking away the uncertainty of issues and events that take place. We will acquire, we will consume, we will engage very, very differently in my mind. In fact, if you look to the next 3 to 5 years, I think you'll look at where our claims organizations go for reactive companies waiting to receive the claim into proactive monitoring and services, where you have a connected home or connected health or connected pet. So we're going to leverage technology in a really, really interesting way to augment your life in very, very different ways. The broker will still be around in 20 years' time because there'll always be those niche risks. There'll always be people that need the understanding, the engagement to try and write those things that matter. So for me, it'll be a much different part of your life. Elements of it will be invisible, embedded, as we talked about earlier. Elements will be exposed very, very differently. I think the insurer will have a much more fundamental role, potentially, than the bank in your future going forward.
Nigel, what's the best way for people to find out more about your work and connect with you directly?
So you'll find me on LinkedIn, Nigel Walsh, or on Twitter, also Nigel Walsh.
All right. Nigel Walsh, thank you very much for joining us today.
Thanks very much.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, FinTech, and the future, check out our regular content at www.bankingthefuture.com.